Hi, so here's a company whose product some of us may know, the Gage Roads Brewing Company. Gage Roads is listed on the Australian Stock Exchange under the ticker GRB. Its share price has fallen from about 6 cents a year ago to 4 cents today, giving it an enterprise value of about $26 million. And it is currently trading on a forward EBITDA multiple of 8 times, which is below where it's been in the past and at the low end of other food and beverage manufacturers. It is, however, trading at a discount to the 6-cent valuation on Shareclarity. So Gage Roads is a vertically integrated craft beer and contract brewer that owns its own distillery in Fremantle, Australia. About a third of its brewing capacity is used to produce its own branded beer, and the rest is used to produce beer on behalf of third parties, the largest being Woolworths. All of its beer is sold domestically and distributed mostly by the Pinnacle Liquor Group to the likes of Dan Murphy's, BWS, Cellarmasters and other stores. Earlier this year, Gage Roads completed a strategic review of its operations and chose to move away from contract brewing in favor of producing more of its own branded craft beers. It is now in a graduated process of doing so. When I looked at the valuation on Shareclarity, one question came immediately to mind. Will Gage Roads be able to absorb the additional brewing capacity? More specifically, is there enough demand in its craft beer within a sector that is experiencing new and increasing competition, and will it be able to grow sales without overspending on marketing or reducing its margins? The earnings forecasts on Shareclarity already contemplate a higher marketing spend, but it also includes an additional risk premium to account for the commercial risks associated with moving away from lower margin but steady contract brewing in favor of higher margin but more volatile branded beer sales. The other question I had was how Gage Roads compared to Moa, another craft beer producer, on Shareclarity. Interestingly, Moa's enterprise value is about twice that of Gage Roads, yet Moa is still cash flow negative, but Gage Roads is cash flow positive. Moa is only partially integrated, but Gage Roads is fully integrated, and Moa sells mostly into the smaller New Zealand market, but Gage Roads sells into the larger Australian market. This suggests there may be some pricing mismatch, but one for closer inspection.